Alright, quick one, guys. Good day, good morning, and good afternoon, depending on where you are. Alright, I'll be using Bybit crypto exchange to illustrate what I have today. In today's video, I will show you guys how to make use of signals. Whenever you see signals that is being copied from or that is being pasted in a platform that you are understand, you can effectively use it and trigger your trades and be on profit. Okay, guys, so the first thing you have to do if you're on Bybit, or I'll be using Bybit today. Maybe in the next video I'll make use of Binance, so that it's gonna benefit everybody depending on the exchange that you prefer using or you have actually verified. So I prefer using Bybit to trade cryptocurrency. Okay, so the first thing you have to do when you're on this space is for you to go to your trade. Okay, you click on the trade, not home. So once you're on trade, you see the view to be in form like this. So as you can see on the top, you see convert, spot, futures, options, straight fi. So we are using the futures trading. All right, this is the futures. Let me go back again. Now we are on the futures. Okay, so you click it to be on the future. So if it is showing something like this, only the chart alone, you click on this icon looking like a book. All right, you click on it, so you'll be on this page. So now the first thing you have to do is to go to this place you see isolated. You click on it, understand, make sure it's on isolated. If it's on cross, if you are being liquidated or if anything happens to your account, it's also going to affect your other funds. That is, like, for instance, now you can put your funds on USDT via spot funding, then you can decide to move it to futures. So if there's a problem, it will leave the futures and cross to the funding, which will affect your money. So isolated means that if you are being liquidated on these futures, it's not going to cross to the other side. So your money in the funding wallet will remain safe. So this is what this actually means. So now we have 25x here. This is how you leverage your money. Understand, you can leverage up to 75x, meaning this is the rate of how you want your profits to be entering. But you have to manage your risks. You have to manage your money, your capital. So we don't advise you using or leveraging high. Yes, it can favor you when you are being in profit, but it wants to backfire you. It will also backfire you with that momentum. So we prefer you using at least 5x, 3x, depending on how you want to manage your risks. So I like using 5 to 10x while trading. So if they say use 5% of your capital, meaning you have to drag this. To be 5%. All right, to be 5% like this. So if you don't have enough capital, maybe if you are trading like $10, that means 5% of your capital is not going to be enough. So you have to drag it, let it be up to $5. So you are borrowing up to $5 to trade, to execute this trade. Okay, so now let's go to the market aspect. So we are using markets. What does this market mean? It means that you are executing your trade at the current market price. All right, now the market price is of this SRP now is $2.13117 or thereabout. So if you're opening this trade, you're opening at this particular market price. But if you are using limit, you are setting your trade to execute at a particular price. I will explain this in the next video. To execute in a particular price. So let's take for instance now, you can decide to execute your trade when it get to 2.20000. so that's what it really means. So now I'm executing my trade at the current market price. That's why I'll leave it at market. All right, so there are some signals that will come. It will come like let it be at limit. It could be at a buy limit, it could be at a sell limit. So when that's, I'll also use the such signals to demonstrate it. So let's say I've dragged this to $5 USDT. So now I want to, based on this trade now, is on downtrend. All right, it's on downtrend. So we are not doing any analysis, but I just assume that this trend, this market might be just going the downside. All right, but I've not done any analysis. I'm just exaggerating. So what am I going to do now? I'll now come to short. All right, so I'll short it. Okay, I executed the trade. So now what will I do now? If I want to add my stop loss or my take profit, what is stop loss? You come to this where you have set TP or slash SL. What does the TP means? Take profit. What does the SL means? It means stop loss. So we come to where you have TP and SL. You click on it. Go back again. You click on it. So you can drag or you can trigger the price that you want to take your profits from. So this is it. Or you can manually type it here. You can manually type when the price drops to 1.9, it should give you a profit of this. So when the price increase to 2000 so amount, it should take you out. So by this now, when the market goes against you, it's actually gonna execute the trade and take you off so that you not make much loss. When the market actually go in your favor, when it hits that particular profit target that you actually put, it should take you off the market and you're good to go. So that is it for this video. If you also have a question, you can drop it on the comment section or on the group so that we can deliberate about it. Thank you very much for today's video.